Welcome to this explainer. Today, we're diving straight into the highly anticipated Q3 2026 earnings report from semiconductor equipment giant KLA Corporation. Now, if you track the global chip market, you already know KLA is a linchpin. They literally make the machines that make the chips possible. So we're going to cut right through the hype and look at the hard financial facts to see exactly how healthy this business is operating right now.
Here's our roadmap for the breakdown. First, we'll look at the Q3 earnings beat, then revenue and cash flow, followed by their massive shareholder returns. After that, we'll cover their AI positioning and market dominance, and wrap up with Q4 guidance and potential risks.
All right, let's jump straight into Section 1, KLA's Q3 earnings beat. To hook you right out of the gate, consider this massive $7 billion figure. That is KLA's newly announced share repurchase authorization. Just think about the sheer magnitude of that number for a second. When a board of directors authorizes an extra $7 billion just to buy back their own stock, it sends a huge signal to the market. Basically, they're telling investors, hey, we generate more cash than we even know what to do with, and we believe our own stock is the absolute best place to put it. That kind of confidence totally sets the tone for this entire quarterly report.
And here is the bottom line on their profitability. Both their GAAP earnings per share of $9.12 and their non-GAAP EPS of $9.40 easily beat the midpoints of their own guidance ranges. In a complex global operating environment, beating your own internal projections like this is a solid indicator of operational discipline. They didn't just scrape by. They delivered a net income of over $1.2 billion just for the quarter.
Moving on to Section 2, let's break down the actual revenue and cash flow behind those earnings.
So KLA pulled in a very impressive $3.415 billion in total revenue this quarter, and it's built on a beautifully diversified global footprint. While China does represent 24% of revenue, you've also got massive contributions from Taiwan at 26%, North America at 12%, and Korea at 20%. Now looking segment-wise, wafer inspection is the undisputed heavyweight champion here. It pulled in over $1.7 billion by itself, which is up 16% year over year. Services also saw a 16% bump to $775 million, and that's great because it provides recurring, predictable revenue that helps smooth out the cyclical nature of hardware sales.
But the crucial point here is what they actually do with that revenue. Generating a 31% free cash flow margin is a massive indicator of financial health and operational efficiency, especially for a hardware-heavy business. Over the past 12 months, KLA produced $4 billion in pure free cash flow. Keep in mind, free cash flow is the money left over after paying all operating expenses and capital expenditures. So a 31% margin means for every single dollar of sales, 31 cents drops straight into the bucket of deployable cash. In the equipment manufacturing world, that kind of cash conversion is an absolute standout metric.
Which brings us to Section 3, massive shareholder returns.
This is honestly one of the strongest capital return track records you'll see in the tech sector. KLA just announced their 17th consecutive annual dividend increase. They bumped it up a huge 21% to $2.30 per share. Combine that with the staggering $7 billion stock repurchase authorization we talked about earlier. Over the last 5 years, they've been scooping up shares at an average price of roughly $457. This strategy systematically shrinks the total number of shares outstanding, which organically makes every remaining share you own intrinsically more valuable.
And the payoff for the March quarter alone was huge. They returned $626 million in share buybacks and paid out $249 million in dividends. That is an incredible $875 million return to shareholders in just 3 months. It really proves their stated commitment to returning over 90% of their free cash flow directly to investors. They're not just throwing around buzzwords about returning capital, they're actually executing on it with extreme consistency cycle after cycle.
Let's shift gears to Section 4. AI and market dominance. This quote from CEO Rick Wallace really puts a human voice to their corporate strategy. He specifically highlights KLA's positioning across foundry, logic, memory, and advanced packaging growth vectors. Because here's the reality, you literally cannot build next-generation, high-performance AI chips without exceptional manufacturing. As chip architectures get microscopic and infinitely more complex, the need for KLA's process control, which is essentially finding microscopic defects before they ruin a multi-thousand-dollar wafer, becomes absolutely mandatory. They are basically the toll booth on the road to the AI revolution. And their financial success is deeply anchored by this staggering 58% market share in process control. Recently reinforced by third-party industry reports,
Owning nearly 60% of such an essential technological choke point gives KLA incredible pricing power and strategic importance. Their tools aren't just an optional upgrade for major chip foundries, they're the absolute industry standard. Independent financial analysts at Simply Wall Street have highlighted this exact dynamic. They pointed out KLA's, quote, flawless balance sheet with solid track record, and noted aggregated fair value estimates reaching up to a high of $1,852 per share. Now, whether it hits that exact target or not, it powerfully illustrates just how much the market values a dominant market share combined with that juicy 31% free cash flow margin.
Finally, let's look ahead with Section 5, Q4 guidance and risks. Looking ahead to the fourth quarter ending in June 2026, KLA is projecting continued strong revenue, aiming for a midpoint of $3.575 billion. Take note of that GAAP gross margin range right there in the middle, hovering right around 60%. Maintaining a 60% gross margin on heavy, complex physical hardware, that is extraordinary, and it speaks directly to the premium pricing power that their 58% market share affords them. Plus, their expected diluted EPS midpoint sits at a very healthy $9.66.
However, KLA is not invincible, and we absolutely have to look at the risk factors straight from their filings. First up, geopolitical trade restrictions in China are a major headwind. Remember, China makes up nearly a quarter of their revenue, so any tightening of U.S. export rules directly hits their bottom line. Furthermore, the semiconductor supply chain is notoriously cyclical. Their customer base is highly concentrated among just a few global foundries. So if those customers decide to slash their capital spending budgets because of macroeconomic fears, KLA's revenue will inevitably take a hit. So, considering their dominant market share, those rock-solid financials, and their aggressive commitment to returning cash to shareholders, I'll leave you with this final question to ponder. With the AI infrastructure build-out already moving at lightning speed, is all of KLA's expected future growth already baked into their current stock price, or does a nearly 60% grip on the process control market mean this cash machine is really just getting started? Review the data, weigh those risks against their undeniable execution, and let that guide your perspective. Thanks for joining me on this explainer, and we'll catch you next time.